Okay, yes. Good morning once again, class. It's been a while since we last met for our discussions in entrepreneurship education, but I'm still your host, Mr. Mutawe Kisto, taking you through entrepreneurship. That is paper one, to be specific. Earlier on in our introductions, we looked at the different books of original entry. We introduced the single column cash book. We looked at the two column cash book, and we also covered the three column cash book. That's where we ended the previous engagements. So today we are going to add on another book of original entry, which is the petty cash book. So our discussion this morning is about the petty cash book. What makes it different from other cash books? Because we have talked about the single column, the two column, and now the three column. But now we are adding on the petty cash book. Hope you have received the notes so you can follow as I explain. So when it comes to the petty cash book, this is basically a book, a cash book, where we record small transactions. So that's where the name petty comes from, small transactions. Petty transactions that take place in the business on a daily basis, on a weekly basis. That may not necessitate someone to keep recording in the cash book. Otherwise, if you're going to record those small transactions in the cash book, you are going to end up overcrowding it. So you have very many transactions in your main cash book. That is the two column or three column cash book. So to avoid that, you create what we call a petty cash book. So that these small transactions can be recorded there. Paid wages of 3,000 to this person who slashed the compound. You don't need to take that one into the what? The main cash book, that is the three column or two column. You can record that one in the petty cash book. Paid transport for someone 10,000. That one you can also take to the petty cash book so that you don't overcrowd the what? The main cash book. So that's why we're going to look at now the petty cash book. So we are going to be recording there small transactions. So many businesses operate this petty cash book, operate what we call a petty cash book, so that you can also relieve the main cashier of a lot of duties. You leave the main cashier to attend to other complex transactions, and then you even employ a petty cashier. I believe in your school you must be having a petty cashier in charge of these small transactions. A particular teacher needs to get some maybe transport to go somewhere for school duties. You go to the petty cashier. You sign a petty cash voucher, which must be authorized by maybe the head teacher, like that. So that's why we'll need the petty what? The petty cash book. So the chief cashier is also relieved of some duties. Maybe another aspect we can talk about why we need the petty cash book is that it relieves. To relieve is to reduce. It relieves the business from frequenting, overgoing to the bank every day. So you withdraw money maybe for the week. Maybe if you realize that maybe for you need 200,000 every week for small transactions. So you go withdraw once, and then you start making those payments on a daily basis. So that is another reason why businesses operate a petty cash book. So the petty cash book is operated on what we call an impressed system. We call it an impressed system. Is operated on what we call the impressed system. The impressed system is where the petty cashier is given money at the start of a given period, that period can be a week. You may operate your petty cash book on a weekly basis. It can be a month. Some businesses operate their petty cash book on a monthly basis, others 2 weeks. So when it comes to the interest, you are given money maybe 200,000 at the start of the week. So if the week starts on Monday, so you are given 200,000 every Monday to spend. Then at the end of the week, you need to balance the amount. Check. You are given 200. How much have you spent? On which items? So if you have spent maybe 180,000, that's the amount spent. So that means you have a balance of 20,000 as your balance. So at the beginning of the next week, the chief cashier is not going to give out 200,000. No. Because you still have a balance, the chief cashier will give you how much? The amount you spent in the previous week is what they are going to give you. So the chief cashier will give you an amount of 180,000. So 180,000 is what we are going to term as reimbursement. Reimbursement. So the chief cashier will reimburse 180,000 to the petty cashier. So that when you add the two, the balance brought forward, the balance that remained in the previous period, plus the amount added, the top up, in other words, in English you can call it a top up, the reimbursement. Then you go back to 200 what? 200,000 shillings. So 200,000 shillings under petty cash is what we call our cash float. Is what we call the cash float. Or you can call it interest amount. Cash float or interest amount. So basically this is our petty cash book in brief. So there are various small transactions, as you see, or expenses that are paid by the business. And among which we have said they include transport. You can look at transport, daily postage, cleaning expenses, repairs. So those are small transactions which need to be carried out maybe on a weekly basis. Those transactions that come during the weeks that do not necessitate the chief cashier to keep on going to the bank. Transport 10,000, you go to the bank, withdraw. Cleaning 2,000, go to the bank, withdraw. It may not be necessary. So to avoid that, and even for accountability, that's why we need the petty cash book, and then we don't overcrowd our main cash book. And we are saying that the petty cash book involves different analysis columns, the different analysis columns, or the payment columns. Those are the analysis columns. So you are going to simply, the question will give you that prepare a petty cash book using analysis columns of cleaning, stationery, traveling, among other analysis columns. So these are columns. When you talk about analysis columns, these are expenditure columns in which the petty cashier records the what? The different business expenses. Those are the analysis columns. So when you read a transaction, we are going to look at one question there. When you read a transaction, they say maybe paid 2,000 for cleaning. Then you check in the analysis columns, where does that transaction lie? Where does the transaction lie? So it must belong to any of the analysis columns. If it doesn't belong to any and you are sure, then you open up another analysis column, which we call miscellaneous or sundries. Sundries or miscellaneous column. that one is allowed to be opened up in case you see that the transaction you have doesn't belong in any of the given analysis columns. So you end up opening up what we call sundries column. Okay. So we are saying in light businesses, the petty cash book is maintained by the petty cashier. I think that one we have already explained. It is maintained by the petty cashier. So in your school, because it's a light business, you must be having a petty cashier. So that the main cashier can concentrate, the chief cashier, the chief accountant can concentrate on other transactions, including supervising this petty cashier. So you record those transactions there, so that you don't also overcrowd the main what? The main cash books. I think we have already explained that. Then we can talk about the different examples of analysis columns. The analysis columns, you have said these are columns under which petty expenses are recorded. These are columns under which petty expenses are recorded. Small business expenses are recorded. These are the analysis columns. So we have communication, and we are saying that this involves payments like envelopes, stamps, letters, parcels, telephone charges, among others. So as a candidate, as a student, you must be in a position to analyze a transaction and say, this one is a communication transaction. So I need to record it in the communication what? Analysis column. So that is your judgment to make as a what? As a student, as a candidate. Okay? That bought envelopes for 2,000. Then you must be able to judge that this one belongs under communication. However, these analysis columns, their transactions to be recorded can vary depending on the analysis columns given. For example, if you have communication, at the same time you have postage. So if you have postage, then envelopes, stamps will be taken to postage. They directly relate with postage. So if you have postage, then you remove them from communication. So you look at the analysis columns given the transactions, then you make a good what? A good judgment. Then we have another analysis column of stationery. Stationery. Items used in the office. Paper, books, pens, ink, pencils. That one is stationery. Stationery. So you can make that judgment. So if you get such transactions, then you know you need to record under stationery. Then we have traveling, payments, way, means of transporting, may be paid for bus fares, border, safe border, taxi fares. Then you know that one is traveling. So any transaction that involves movement, then you know you're going to post it under traveling analysis what? Column. Then miscellaneous, general or sundry expenses. We say that this records transactions that have not been catered for, that cannot belong to any of the analysis columns given. So if you read through your transactions and there is a transaction 1 or 2 or more that doesn't belong to any of the analysis columns given, then you open up what we call sundry column, the sundry expenses. Then lastly, we can talk about the ledger or purchases ledger column, purchases ledger column. And we are saying this one is used to record when you are paying money to the what? Creditors. So paid money to Mutawe. Don't take it to any column other than the ledger. So you have that column. Once you read your transactions and you're making some payments to someone, there is a name. It will be captured by indicating the what? The name. Paid shillings 2,000 to Mutawe. Once they mention the name of the person, then you take that transaction to the ledger column, to the ledger analysis column. So those are some of the analysis columns we have in our transactions. Those are some of the analysis columns. So from there, you can talk about the interest, which I've already explained in the introduction, that the petty cash expenses are controlled using what we call the interest what? The interest system. That under this system, a fixed amount is maintained by the petty cashier in a given period of time, which can be weekly, monthly, depending on the organization, depending on a particular organization. So you may find that your school operates the petty cash interest system of a weekly basis. So the main cashier is given a given amount, must have a given sum of money on a weekly basis. That one we call it the interest what? System, the interest system. And we say that that amount is what we call the cash what? Cash float, or you can call it the interest amount, or petty cash refund. That is the interest system. So hope you are comfortable with that one. We have already explained. So for you to get money from the petty cashier for accountability, then the petty cashier has a document we call a petty cash voucher. Petty cash voucher. That's the document which has to be signed and approved, authorized by the respective body. So you may find in your school that petty cash voucher, you have to take it to the main cashier or the head teacher or the chief accountant, depending on the organization, to approve that payment. So that from there you can go to the petty cashier, they give you the what? The money. So a petty cashier makes petty payments out of a petty cash refund after supporting document called what? A petty cash voucher. A petty cash voucher. And we are saying that at the end of the specified period, the petty cashier balances the petty what? The petty cash book. So we are going to see how do we balance our petty cash book. At least by the end of this lesson, you must have learned how to balance a petty cash book. It's slightly different from how we balance the 2-column and then the 3-column what? Cash books. It will be slightly different. And we are saying that with all the petty cash voucher, the remaining cash is maintained and then reimbursement is made for the amount spent in a given period. That's why you say that after the entrepreneur main cashier has carefully checked payments made in the week, in the month, by the petty cashier and the remaining balance, he or she is then gives out the petty cashier the exact amount of money he paid out for petty expenses. That reimbursement I talked about in the beginning, that if you spent 180,000, the interest amount is 200. You spent 180, you have a balance of 20. So if they check all your payments and the balance, then the main cashier, the entrepreneur, gives back, refunds, gives you the amount you spent, which we are calling the reimbursement. So that process is what we call reimbursement or replenish. So that you can go back to the original cash float or the interest amount or the interest amount. So there we have our format of the petty cash book. We have the format of the petty cash book. That is the format of our petty cash book. So you have the receipts and then the cash book, then the date. You have the details column, then the petty cash voucher number, and then payments made. And then the payments made. So the payments column, you see that it captures also the analysis column. So the analysis columns are part of the payments. So you divide it vertically and then horizontally. So you have the analysis columns and then the area. So before the petty cashier records the amount in the analysis column, maybe communication. The petty cashier will first record that amount in the payments what? Column. If you can see very well on the screen. The petty cashier will first record in the payments column. After the payments column then takes the amount to the what? To the respective analysis column. After which we can now balance our petty cash book. Do I have some questions here? Okay, no questions yet. Okay, so that means we are still moving on very well. In case you have any question, please ask in line with what we are studying, so that we don't leave anyone behind. I want at the end of the lesson, our 1 hour of discussion, everyone is comfortable, conversant, confident. You can prepare the petty cash book. If they have to give you an exam, today, at the end of the day, you are able to do what? To prepare the petty cash book. So in brief, we've looked at the petty cash, what it means. The petty cash book, that we use it to record small transactions that may not be recorded in the main cash book, so that we don't overcrowd our main what? Cash book. And then we have also looked at the different analysis columns used in the petty cash book. Maybe we can add on something more, and those are the components. We can also talk about the components of the what? The petty cash book. Components of the petty cash book. Components of the petty cash book. And when you look at the format of the petty cash book, it gives you the different what? Components. It gives you the different components of the petty cash book. Basically, when you look at the first column, that is the receipts. That is one of the components of the petty cash book. Then you have the payments what? Column. And then finally, the ledger. Those are the main components of our petty cash book. The components. So you have your receipts. Have your receipts. That this is where the interest amount is recorded. So you can write there. Receipts, you see it very well. This is where the interest amount is recorded. Or you can say this is where the cash float is recorded. This is where the cash float is recorded. So in any question, they are going to give us the cash float or the interest. So you are going to take that interest and record it in the receipts what? Column. You record it in the receipts column. Okay? Hope that one is clear. Then the other component is the payments what? Side. Payments side. So the payment side, this is where the different analysis columns are recorded with the respective amounts. That is the payment side. So you see on the screen, you have their payments analysis columns. Communication, traveling, sundry, expenses. Those are the main analysis columns given maybe in the question. Given in the question. Then we can also talk about the third one, just slightly different from the analysis, is what we call the ledger. The ledger account. The ledger account. So the ledger account is already captured when you look at the analysis columns there, but we give it special treatment because it is not like other analysis columns. No. This is where small payments to creditors are recorded. This is where small payments to creditors are recorded. So that is now the what? The ledger. So someone may ask you to explain the different components of the petty cash book. So you have the receipts. This is where the cash float is recorded, or the interest amount is recorded. So then the second one, you have the payments column. This is where the analysis columns are recorded, capturing the different amounts, small expenses made. And then lastly, you have the what? The ledger column, which records small payments to creditors. How do you tell that this is a payment to a creditor? They will mention the name of that person, of the creditor. Paid 10,000 shillings to Ahmed. Paid 20,000 shillings to Shifra. Paid 30,000 shillings to Maria, like that. So they will mention the name of the what? The creditor. Then you know that one you have to take and post in the ledger column, and post in the ledger column. Okay, since I don't see any question yet, that means people are moving on very well. That is good. That is very good. Then we are saying how to record information in the petty cash book. How to record information in the petty cash book. At least I'm sure what we have here on the screen we have already discussed. We are just re-emphasizing. We are just re-emphasizing. In other words, we have already captured how we record in our petty cash book. We are saying the amount of petty cash received by the petty cashier is recorded in the what? Receipt C column. When we talked about the receipts what? Column. On the debit side of the cash book. Basically, you look at the receipts what? Column. And then each payment made out by the petty cashier is first what? Is first recorded in the payment C column. I think I explained that one. When you look at our payments column there, that it is first recorded in the payments column before being posted to that at respective analysis column, or after which recorded in the analysis column where it falls. Then we are saying at the end of the period, at the end of the what? The period. At the end of the period, the total amount paid for each analysis column is determined. So every analysis column, if, for example, if we are looking at communication, after at the end of the period, you need to get the total amount paid out under communication, total paid out under traveling, under sundry, under ledger. So you will get those what? Totals. That's what we mean. That at the end of each period, the total amount paid for each analysis column is determined. And the overall total of the payments column is also calculated. So the total payments amount in the payments column, this implies that the total you get for the payments column must be equal to the summation of the different analysis columns. I'm repeating, the total you get for the payments column. For example, if in your payments column you get 180,000, must be equal to the total you get when you add the different analysis columns. So you get the total for communication, total for traveling, sundry, ledgers must equal to the total amount you have got under payments, because before you record in the analysis columns, you first record in the payments what? Column. So that's why those two totals must be the same. Then we also say that the remaining cash not spent is recorded in the payments column as balance carried down. Is recorded in the payments column as balance carried what? Balance carried down. Okay. So that's how we record in our petty cash book. And then after we balance down, so you get the balance carried down and also balance brought down, the way we have been doing. The balance brought down is then added to the total payments, after which two sides are equal. The total payments column is exactly the same as the total receipts column. Then the cash balance carried down in the payments column is then transferred to the receipts what? Column below. So you're going to see how we transfer as balance brought what? Brought down to start the new period. And then the amount of cash refund given to the petty cashier as reimbursement. You're going to find also saying reimbursement. After you have got the balance brought down, then you say reimbursement. That is on the first date of the new period. Remember, balance brought down is written on the first date of the new period, of new month, new week, like that. So even our balance brought down here, we shall maintain the same. First day of the new period. Balance carried down, last day of the period. So if you're operating it on a weekly, maybe it will be 7th balance carried down, then 8th balance brought down. If it is monthly, then you say maybe it's January 31st balance carried down, then 1st Feb balance brought down. So even the reimbursement will be on the first what? Day of the new month. So now the petty cash book is ready to record the payments made in the new period. The petty cashier, you change it here. The petty cashier is ready, not cash book. The petty cashier is now ready to record the payments made in the new period. So, members, that's how we record in our petty cash book. That is how we record in our petty cash book. That's how we record in our petty cash book. Okay, so there we have a question so that we can practice. At the end of the lesson, we must be conversant. We must be conversant with the petty cash book, how to record items in the petty cash book. So you have that example. Petty cash transactions extracted from the records of Dennis on 30th November 2020. So you have the transactions there. Friend transaction, then they say required party A prepare a petty cash book for Dennis with analysis columns for wages, traveling, postage, stationery, cleaning, and they want and ledger. And then lastly they say post the transaction to the ledger accounts and balance them off. Post the transactions in the ledger accounts and balance them off. So that is our question for discussion. That is our question for discussion. So, can we all draw our petty cash? Then we can start recording. Then we can start what? Recording. So you may not have recorded all the work, all the notes, copied the notes, but you can estimate the space you need to skip. You have the notes already, so you can estimate how much you need to skip. Then you write the format, then we start the example. You may not copy this other information for purchases journal. We shall talk about it later on. So don't copy it for now. Purchases journal, don't copy. I just added it there because after the petty cash, we shall look at the purchases journal, but we still need to look at some examples. We still need to look at some examples. Okay, so you can get some examples. Then after the examples, then you can look at the advantages. Or you can even estimate space for advantages of using the petty cash. So that after you can put there the what? The example. The choice is yours. The choice is yours. You can estimate space. You write even the advantages. By the way, let's talk about also the advantages, where you have talked about some of them in the introduction. That one of the advantages, it saves the main what? The main cash book from overcrowding, from recording many small what? Transactions which cause overcrowding. I believe that one we explained. Then the other one says it simplifies the posting of small what? Transactions to the ledger. Eh? Those small transactions, payments to creditors. Eh? Then simplifies regular checking of the work of the petty cashier by the main what? The main cashier, because you have a cash book, so you can easily check whether someone is recording information correctly. Eh? Correctly, then reduces fraud. You may not be cheated by these people. So because everything is supported by a document called the petty cash what? Voucher. That's why it reduces fraud. And remember, the petty cash voucher has to be signed, authorized by the respective what? Body. You may find that in the school it is authorized by the head teacher, must sign there. To show that you have allowed Mr. Mutawe to pick transport of 10,000 to go to town, maybe to do some school duty. So it reduces what? Fraud. Then the other one says reduces workload for the chief what? Cashier, because it is operated by the petty cashier. It is operated by the petty cashier. So it reduces work overload. The main cashier can concentrate on other accounting work, including supervising the petty cashier. Then the other one says it promotes what? Accountability on the side of the petty cashier for all payments made, because you must maintain record. You must maintain record. So you cannot say they gave you 200,000 at the start of the week, but you cannot account for it. No, the records are there. Then reduces unnecessary movements. I believe that was captured at the start when introducing the petty cash. There's unnecessary movements to the bank. So you withdraw money at once, then you keep making those small payments throughout the what? The week. Other than a situation where you keep going to the bank every day. Okay? It causes a lot of wasted time and money because you have to pay for transport. So those are some of the advantages. So you can write the advantages or leave space for the advantages. Then you can begin on the example, our example 1. So let us roll our petty cash and then we start recording. Hope you are all rolling your petty cash book or drawing your petty cash book. You all have access to the notes and even the format is there on. You have looked at the format, so you should be in position to draw. Maybe I can. Format of our petty cash book. So you can begin with the title. The name of the business is Dennis. So they are for Dennis. Okay, so you come and say Dennis is petty cash book. For which period? You're looking at January, November. Okay, then you say for the month of November. Which year? The month of November 2020. For the month of November 2020. So you have written your what? Your title. You have written the title for your petty cash book. Then now you can start ruling it or drawing those columns. The respective what? The respective columns. The respective columns. Hope you are able to see clearly here. Then you begin. Here you have your debit. And then you also have your CR. This time not CR7, but just CR. Don't add the other 7. Then you can begin with your receipts. Then you can add the column for cash book, so you may not add. Don't have enough space here. Then you have the column for date. You have your date column. Then you have the details column. Then you have the voucher number. So the voucher number is the petty cash voucher number, that abbreviation. So you can say PCV number, petty cash voucher number. So from the petty cash voucher number, then you can look at the payments. You can look at the payments of payments. Let me try to squeeze this information. Information can fit. Then after the payments, you look at the analysis columns to be drawn. So when you look at our question, we have wages, traveling, postage, stationery, cleaning, ledger. Those are the analysis columns. So if you read in the information and the some transaction which does not belong to any of those analysis columns, then you also create what we call sundry. You looked at that analysis column, sundry or miscellaneous or general expenses column. So, but now our question, we don't have any sundry. So all transactions will belong in any of the analysis what columns. So there are 1, 2, 3, 4, 5, 6. Do I have that space here? I need to reduce, create more space. Let me try to squeeze the information here. So you have the receipts. Then you can have your date. After the date, you can have the details or particulars, whichever you prefer. Details, then you have your petty cash voucher number. Trying to squeeze, then you have the payments. So after the payments, now we can draw our different analysis what? Columns. We can have the different analysis columns. You can have, sometimes you can even write analysis columns. Then you begin getting the different analysis columns according to their order of appearance. So you begin with wages. Then we have traveling. After traveling, we have postage. Hope you are also recording because I'm trying to squeeze these columns. Stationery. Then we have cleaning. And then lastly we have the what? The ledger. For here, you have enough space, so don't squeeze the work. So there we are good to go. And by principle, we say that any column where you're going to write amounts, you must indicate the what? You must indicate the units. You must indicate the units. So because under receipts, we are going to write an amount, so you can put the units, shillings. The payments column, you are going to write the amount, you put the what? The units. The same applies to the different analysis what? Columns. Different analysis columns. Indicate your units. So there we are. There we are. So at that stage, once you confirm you have ruled it very well, now you can begin recording. Now you can begin what? Recording. And what is the first amount we record, class? What is the first amount? We are going to first record in the what? The receipts what? Column. In the receipts column. We are going to first record in our receipts column the cash float or the impressed amount. So if you go back, to the question, petty cash transaction we extracted November 1st, cash of shillings 500 was given to the petty cashier to maintain a petty cash book on impressed what? System. On impressed system. So that one indicates that that transaction on first cash of 500,000 is our cash what? Float. Is the cash float. Are you together? So that's the first item. So you don't make any payment before you get your cash what? Float. Otherwise, the money you are spending, where will you be getting it from if you don't have the cash float? So you first identify your cash float, then you begin making what? Payments. So can we go and record our cash what? Float of 500,000 or 500,000. So you have in details the amount. You can put 500 what? 1,000. 500,000. What is the date? You can even put the month on top, which is November, so that you don't keep repeating. 2020. Then you only write the date, which is first. So details, this is what? Our cash what? Cash float. This is our cash float. That is the cash float. So we have recorded the first transaction. We have recorded the first transaction capturing the cash float. In situation where you had a balance and they are just reimbursing, we are going to see that we shall be adjusting this area. We shall look at such a transaction. Then we see how to adjust. Okay. Hope we are all together at that point. Make sure you have ruled your petty cash book like this. Though there is another format, I may show it to you also. When time comes, I'll show you another format. But this is one of the formats we use. But no matter the format, all the information must be captured. No matter the format you are using. So after recording, then you can begin recording your what? Your payments. You can begin recording your payments. And we say, before you take the analysis column, you first record in the payments what? The payments column. So let's record our second transaction, which is the transaction on second. So on second, what does the transaction say? It says wages. Wages. So you have your wages in details of how much? Wages of shillings 10,000. We said you first record here in the payments what? Column. So after recording 10,000, now the next question is, In which analysis column does wages fall? Does it fall under wages, traveling, postage, stationery, cleaning, leisure? So there you use your own what? Judgment. So when you check wages and the analysis column is given, you find that wages falls under this column for wages. At least it relates directly. So you come and also put there 10 what? 10,000 shillings. You come and record 10,000 shillings. So you have recorded it in the payments column first, and then you look for the respective analysis column where it does what? Where it falls, where it lies. Then you record it there. Are you together, members? So we have recorded the first what? Transaction. Then you move on to the next one on third. The transaction on third. It says stamps were bought for 30,000. So you come in details, stamps. Payments, how much did you pay for stamps? 30,000. Then you check, where does this item lie? Stamps. Does it fall under wages? Traveling. Do you use stamps for traveling? Is it under postage? Is it under stationery cleaning? Do you use stamps for cleaning? Or you are paying your creditor to take it to later? So where does it fall? Realize that when you look at the analysis column, stamps perfectly fall under what? Under postage. We are going to use those stamps when we are posting letters. So that's where you record it, 30,000. That's where you record. So we are done with the transaction on third. So you move on to the transaction on fifth, and it says floor polish bought. Floor polish on fifth. So in your details you have floor polish. Floor polish. How much? 5,000 shillings. Then you ask yourself, okay, floor polish in which analysis column? Does it go to wages? Is floor polish related with wages? Is it related with traveling? Floor polish. Someone was polishing the floor to shine. Is it related with postage? Is it around stationery? Is floor polish stationery? Cleaning ledgers. Realize that floor polish, because someone is polishing the floor to make it shine, that means that one is what? Cleaning. So you take it to the cleaning what? Analysis column. The cleaning analysis column. And then you put there what? 1,000 shillings. Then we move on to the next transaction on 6th. The transaction on 6th, which says something is blocking my screen here. So the transaction on 6 says office worker paid taxi fare shillings 7,000 to travel to a special meeting. Maybe the organization, the business, sent that worker for a special what? Meeting. And you had to pay for travel for taxi fare 7,000. So on 6, you have there taxi what? Fare. Taxi fare. Taxi fare. How much? You first record in the payments what? Column 7,000. Then you ask yourself, where does it fall? Is it under wages? Falling posted where? So because it is a taxi fare, that means it directly falls under falling. So you come and put there 7 what? 70,000. You come and record 7,000. Then we move on to the transaction on 7th. the transaction on 7th, which says paid painter wages shillings 3,000 for repainting wall in the kitchen. So the actual item is the wages. The wages. So on 7th, you have wages, painter, wages. How much was it? It was 3,000. Painter's wages, 3,000. Then you check where does it fall. Obviously, it is going to fall under what? The wages analysis column. So you come and put there 3,000 shillings. You come and record 3,000 shillings. You see how easy it is, members, to record in the petty cash book. You just need to identify the item, the transaction, record it in the payments column, then look for the respective what? Analysis column where it falls. Once you position, record perfectly, then the balancing bit will be very easy. So you just need to identify the details, the item, where does it fall, record it there also, and then you move on. So I believe by the end of the session, everyone should be conversant with how to record the petty cash book. Okay, then we have another transaction on 10th. Transaction on 10th says office worker paid bus fare 1,500 to travel a special meeting. We have already looked at the similar transaction. So we have transaction on 10th. So you have there bus fare as an item in our details. How much was it? 1,500. Well, where was this person going at 1,500? Maybe he was just rotating around nearby. So 1,500 what? 100. So where does it belong? Bus fare. Obviously, we are going to take it to the what? The traveling analysis what? Column 1,500. Okay. Then on payroll, paper bought for general office purpose, 4,000. So you have your transaction on payroll. So you have there paper, the paper. Some of you call money paper, but now we are talking about this paper we write on. So paper, how much? 4,000. 4,000 what? Shillings. Then you check this paper, where does it fall? Can it fall under wages? Can it fall under traveling? Can it fall under postage, stationery, cleaning, or ledger? So because we have stationery, then obviously you're going to record it under stationery because it's office. So you come and record forward 4,000 under stationery analysis what? Column. Under stationery analysis column. Hope everyone is moving on very well. If you get stranded, please, you send a question and then it is addressed immediately. Then we have the transaction on 19th. On 19th. And what does it say on 19th? It says, bought brushes for shilling 6,000 to clean canteen. Maybe this business had a canteen. Hope it wasn't our school now. But at least they had a canteen. For shilling 6,000 to clean the what? The canteen and office floors. So that means there in details we have brushes. Brushes. How much? 6 what? 6,000. Then you check where the brushes fall. Wages, traveling, postage, stationery, cleaning, ledgers. Okay? Obviously, they are going to fall under what? Cleaning. Under cleaning. So you come and also post in the cleaning analysis column and you put there It's what? 60,000 shillings. 6,000 shillings. Then we move on to our second last transaction, which is there on 21st. On 21st. It says ink board for office use. Shillings 50,000. Ink board for office use. Shillings 50,000. So you have your item in details, ink. Ink. 50,000. 50,000. Then you check for office use ink. Is it under wages, traveling? Do you use ink for traveling, postage, stationery, cleaning, wages? So obvious, because it is ink for office use, then you know that you are going to take it under your stationery. And then you come to the stationery analysis column and put there 50 what? 50,000 shillings and record there 50,000 shillings. And then the last transaction on 22nd. The last transaction on 22nd. It says paid a creditor, Adrian, shillings 40,000 out of the petty cash. Paid a creditor, Adrian, shillings 40,000 out of the petty cash. And remember we said if you pay out creditors, in which column do we record? We say that we record that one in the ledger column, even if it is not given in the question among the analysis columns to be used. So long as you find that you have a creditor to be paid, as a must, you have to open up that ledger what? Column. That ledger analysis column. That should be at the back of your mind. Whether given in the question among the analysis columns or not. So long as you read through your transactions and there is someone you are paying, they will mention either creditor, so and so, or they will mention the name. Paid Adrian without the word creditor. That one obviously tells you that this person is a creditor the moment they mention the word, the name. So you come and say, in details, you record the name of the creditor, and that is Adrian. First record the amount in the payments column. 40 what? 40,000 what? Shillings. And then take the amount in the ledger and put there 40 what? 40,000 shillings. So class, we have recorded our transactions in the petty cash book. But as you remember when we are looking at how to record information in the petty cash book, so we have so far recorded the transactions, but now we need to total. We need to total the different analysis columns and even the payments what? Column. We need to total all of them. So that is our next item. So you get your ruler, you get your what? Your ruler, and then you draw a line just immediately after the last word, transaction. So I'm drawing my line beginning from the payments, cutting across the different analysis what? Columns. Cutting across the different analysis columns. Can you do that for me? So I've drawn that line there. Then I'm going to total the different columns. We say total the amount paid for each analysis column and also the overall total payments. And the overall total payments. So you come and you total. So let's total together. So we have our 10,000 plus 30,000 plus 5,000 plus 7,000 plus 3,000 plus 1,500 plus 4,000 plus 6,000 plus 50,000, and then lastly plus 40,000 plus 40,000, giving us a total of 156,000. 156,000. How much? 500 shillings. 150,500 what? Shillings. So those are our total payments. Yeah, those are our total payments. You can even write it here. Total payments column. Okay. So after getting the total payments, then also go ahead and total the different what analysis columns. So we begin with the wages column. So we have there 10,000 plus 3,000, giving us a total of 13 what? 13,000. Then we move on. We have our traveling. You have 7,000 plus 1,500, giving us a total of 8,000. 500. Then postage we have there 30,000. Stationery we have 4,000 plus 50,000, giving us a total of 54,000 shillings. Then under cleaning column we have 5,000 plus 6,000, giving us a total of 11 what? 11,000. And lastly our ledger column we have there 40,000, giving us a total of 40 what? 40,000. Then after that, you come and close off the analysis columns. Only we begin by closing off the analysis columns. And remember, when we are closing off, we draw there two what? Two lines. We draw there two lines. So come and close off the analysis columns by drawing there two lines. Only the analysis columns. So you see, I'm beginning from the analysis column, that is wages, moving the other side. So you come and draw those two lines to show that you are closing them off. You bring your second word, line and close off. So we have closed off our analysis what? Columns. And to check that mathematically you have added well, you need to total the amounts for the respective analysis columns. The total you get must be equal to the total amount you have here in your total what? Payments. So if you add 13,800, 30,000, 54, 11, 40, you must be able to get 150 what? 60,000. Let's add and receive. So you have 13,000 plus 8,500 plus 30,000 plus 54,000 plus 11,000 plus 40,000, giving us a total of 156,500. So once you get this similar total, then you know you've recorded everything well. Okay, we are about to conclude our preparation of the petty cash book. We have balanced off the analysis columns. Now we are going to come and balance off the total payments column with the receipts what? Column. Balance off the total payments column with the receipts what? With the receipts column. With the receipts column. So the way we are balancing our two column, the three column. So when you are balancing them off, you are going to skip a line here. You skip only one line where you are going to record your balance correct down. So skip a line and then you draw the other lines you've been using to balance off the two column or three column cash book. So you skip a line, I've skipped, and then I've drawn the lower lines must be 2, so that you're going to be closing. Do the same on the opposite side under the receipts what? The receipts column. This must be directly opposite. So you come. Can everyone do that for me? We skip a line here, and then we draw these lines, both for the payments column and then the receipts what? And the receipts column. And the receipts column. So which amount do we put in this space? When it came to the 2 column, 3 column, we are recording there the bigger amount, the bigger total. So here in this space, we're going to be recording the interest amount, or the cash what? The cash float. We're going to be recording there the cash float or the interest what? Amount. And how much was our cash float? You see, our cash float is 500 what? 1,000. So you come and record 500,000. 500 what? 1,000. Come and record 500,000. 500,000. So after recording the interest amount in that space, the next step is to get the balance carried down. Is to get our balance carried down. Balance carried down, and then the balance brought down. And as you remember, when we are getting our balance carried down, we simply subtract the small amount from the bigger amount. So this time around, we are going to subtract our total payments from the cash float for us to get the balance carried what? Down. We get the total payments, subtract them from the cash float. So your balance carried down and balance brought down will be your total, or you can say cash float, minus the total payments. You can put somewhere in your rough work. Minus the total payments. So our cash float is 500,000 minus 156 what? 500,000. Rubbing off the title just to create space, so that what we calculate everyone is able to see. So your balance brought down, balance carried down. So your cash float is 500,000. Subtract the total payments of 156,000. 500. That gives you a balance of, get our calculators, and we get the balance. So 500,000 minus 156,500. It gives us a balance of 343,000 500. 343,500. So that is our balance, and we are going to record it as the balance carried down, and at the same time the balance brought down. The balance carried down will be written inside here. The balance brought down will be written outside in the receipts what? Column. Balance carried down, we maintain the same principle. Is written on the last date of the month, while balance brought down is written on the first date of the new month. The way we have been recording under the cash books, the other cash books, 2 column and then the 3 column. So you come here and record this was November. November ends on on 30th. November ends on 30th. So you come and say balance. Balance. Then you can say carried down. Balance. Carried down. Carried down, you are allowed to abbreviate C stroke D. The balance carried down, and how much balance is it? The difference is 343,500. So that when you add the total payments plus the balance carried down, then it takes you back to 5 what? To 500. Do the same on the opposite what? On the opposite side. Do the same on the opposite side. This time around it will be on 1st. Because we are outside, you can read the complete date. 1st December, because that is the new month now. First, the month we are dealing with is November, so the next month will be December. So the beginning date is 1st December 2020. Then you say balance brought down. We are not putting it here because our receipts column is this what? Side. I'll give you another format where the receipts is next to the payments. But for now, let's use this format. So balance brought down, you come and write that balance of 343,500. 343,500. We have so far balanced the petty cash book, but we have not yet finished. If you look at the steps we looked at when we are recording, how to record the information in the petty cash book, you see that something is still what? Is still missing. Is still missing. Because we said the remaining cash not spent is recorded in the payments column as carried down. That one we are done with it. Then total balance brought down is got, carried down for payments is got, and then we need to make a what? A reimbursement. So the last item or record majorly is the reimbursement. And the main cashier is going to reimburse on the first date of the new what? Period. We say to reimburse is to give you back the amount you spent in the previous period. So that you can go back to the original cash what? Cash float. You can go back to the original cash float. So here you can come and say 1st December 2020, then you say reimbursement. Reimbursement. Then you record the amount here. How much money is going to be reimbursed? The amount spent in the previous period, the total amount spent, the total payments, is the amount that chief cashier is going to give back to the petty cashier at the start of the period. So if we spent 156,500 as total payments, that is our amount for reimbursement. 156,000 156,500. 156,500. So you can even create your cash float still on the same date, 1st December 2020. Then you say cash float. Now we are looking at the new period, how it will appear. So the cash float there will be, come and total 345. The balance brought down plus the reimbursement, the amount that is going to be given by the chief cashier to the petty cashier, it has to take you back to 500,000. It has to take you back to 500,000. So members, this is how we record in our petty cash book. In case you have any question, please go ahead and ask. Now, in the remaining minutes, let us talk about part B. Part B. How do we post transactions to the ledger accounts. How we post transaction to the ledger accounts and balance them off. The balancing is the same. The way we have been balancing with other ledgers. Basically, you need to look at how to post so that you can do the balancing also. I know you know it very, very well. So let us balance off. I mean post transactions in the ledger. In the ledger. I need to keep some information aside so that I can know which items. Let me clean off maybe here. Mm. So when it comes to balancing, I mean posting transaction in the ledger, we are going to basically be posting these analysis columns. So the analysis columns you have give you the accounts to open up in the what? In the general ledger. However, when it comes to the ledger column, you don't open up ledger account. No, you open up the respective account for that creditor. Our creditor was Adrian. So you have to open up Adrian's account. So if you had also Mutawi, you open up also Mutawi. You had the Musa, you open up Musa's account. You had Mariam, you open up Mariam's what? Account for the ledger. So you don't take the total. But for the other analysis columns, you take the what? The total only as petty cash. So let me first pick the total for wages like that. I show you how we record. The total for wages is 13. Then for traveling is 8,500. Postage is 30,000. Then stationery is 54,000. And then we have cleaning. Cleaning is 11,000. And then ledger we take the respective personal account, that is Adrian. So you pick the respective creditor's name, 40,000. So if you had 3 creditors, so you separate those accounts. You had Mutawi, you open Mutawi. Mariam, Ahmed, like that when it comes to the ledger analysis column. So let's see how we record in our ledger. So we are looking at now part B. That's what we are discussing. Part B. Okay. So when it comes to our ledger accounts, so you simply open up and say ledgers. So you have your general ledgers. And among the general ledgers you have the wages account. Remember we said you take the different analysis columns. Give you have units, and then it was November 2020. So you simply come and write the last date of that month because you are taking totals. When you got those totals was on the last date of the what? On the month. During the last date of the month. So you come here, the last date of November was 30th. Put there, 30th. Then you say petty cash. Just that, petty cash. How much was the total for the analysis column? That's 13 what? 13 8,000. Then after, you come and do what? And balance. The same way we have been balancing the different what? Ledgers. So you have 13,000, 13 what? 1,000. Then you have the 30th balance carried down 13 what? 1,000. And then on 1st December 2020, we will write our balance brought down on the new month, first date of the new month. Then you say balance brought what? Down. 13 what? 13,000. Members, you have balanced off your what? You have balanced off your wages account. We are answering part B, post transaction the ledger accounts and balance them off. So we are done with that one. We are done. Then we can now open up the other account, which is for the traveling. I'm just rubbing off the title. We open up another one. Traveling. So I have my traveling account now. Traveling account. So you do the same 30th petty cash. How much was the total for traveling? 8,500.
Was it on 30th?
Yes, we record on 30th because that's the last date of the month when we are balancing off. So we use the last date when we got those totals. It was the last what? The last date. So we record using that last date of the month. If it was December, then you use 31st. For November, you use 30th. So you come and get your totals still. Put them there, 8,500, 8,500. Get the balance carried down, 8,500. Even balance brought down, 8,500. So you are done posting that transaction in the traveling what account under the general ledgers. Okay, now we move to another one. Now we are moving to postage. So now you can open up the postage account. Open up the postage account. Make sure for you are not rubbing off yours. Just open up another one. Okay. So you have your postage. The total for postage was 30,000. So petty cash 30,000. Because you are showing where this money is coming from. It's coming from the petty cash. Then you do the same 30,000. 30,000. Get the balance carried down 30,000 and even the balance brought what? Balance brought down. You see? Just easy stuff here. So you are done with your postage what? Your postage account. So you move on and open up another account. So what's the other account you are going to open up? Which other analysis column? So we still have stationery. So you come and open up stationery account. Just the amount, title and amount is the only thing changing. The rest, the same. So the total for stationery was 54. So you say petty cash 54,000. Put the totals in that space on both sides, and then get your balance carried down, and then balance brought what? Down. Balance carried down on the last date of the month, balance brought down on the first date of the new month. That's why you see that I'm writing the whole date now, because I'm outside. So I write 1st December 2020. So you are done with your stationery account. Let's move on and we open up for the next analysis column, respective account there. And the next analysis column is for cleaning. Yes, it's for cleaning. So you come, total for cleaning was 11. Remember I said for those analysis columns, we take the total. We take the total. 11,000. Balance carried down 11 what? 1,000. Balance brought down 11,000. You are done. You are just through and enjoying a lot of marks here. Very easy stuff. So we are done with your cleaning account. Now you can record your last what? Account. We said we have the analysis column for ledger, but we don't open up ledger account. We open up the respective accounts for the respective creditors. We open up accounts for the respective what? Creditors. So if you had there 4 creditors, you have to open up those respective what? Accounts. You had Adrian, you had Musa, you had Shifra, you had Mutawi. You open up those accounts and record the respective total for those accounts. So here we had only Adrian, so we need to open up Adrian what? Adrian's account. Did you say petty cash? How much did we pay Adrian? It was 40,000. 40,000, 40,000. Get the balance carried down 40,000, and then balance brought down to 40 what? 40,000. So members, that's how we post our transactions in the what? In the ledger accounts, and we have balanced them off. So thank you for being a good audience. I'll send you another question for practice. I'll send you a question for practice. Have a good day.